Right, I think we're good to start. What do you say, Divija?
Yeah, sure. Fine. So do you want me to take the lead?
Yeah,
Or
I'll take the honor of introducing the three great women we have on our panel, and then you can just take over the questionnaire round. Okay.
okay.
Thank you so much, everyone, for coming here and attending this great session. I think I'm pretty excited about angel investing myself. And so, yeah, I'm a bit selfish there. And so I thought, okay, let's organize something like this. And we had great speakers. So, yeah, we are here with this session. So, without any further delay, let me introduce you to our speakers. So we have Smita Bagla on our panel. She has been the CEO of Align Strategies and managing partner of Amritt. She's a venture partner with IBOS Ventures, OCA Ventures, TiE Global Angels, TiE SoCal Angels, to name a few. She has also founded the angel investment group for TiE SoCal Chapter during her two items as a president. She has been one of the 7 national board members for Pan IIT USA from 2008 to 2013. And she's very passionate about IT startups. She's a tech entrepreneur, very active angel investor, board member, and a product strategy advisor to a lot of startups. She's very passionate about women's success and loves mentoring women in STEM. So, welcome, Smita. We are very happy to have you on our panel.
Thank you.
Next on our panel, we have Archana PriyaDarshani. She is the general partner at PointOne Capital. She has been the ex-venture partner at Unicorn India Ventures. She has invested in a lot of companies. She's one of the top 4 women angel investors with a portfolio of 45 plus companies. So welcome, Archana. We're very happy to have you on our panel.
Thank
So
you.
third we have Divija, one of my favorites. So she has been mentoring me a lot during all these sessions, and I've got to learn a lot from her. So Divija, she's a venture capitalist, and she has journeyed 6 years with global startup ecosystem. She has been associated with EMVC Fintech Fund, Techstars and Tracxn. She has closely worked with startups at their pre-product and early stages of growth and efficiently led their GTM and strategic alliances. So welcome, Divija. It's awesome to have you on our panel. So
Thanks, Apurva. Thanks for the sweet words.
So I think we are done with introduction. So I'll just request all of you, I mean Smita, Archana, and Divija, to share 2 cents from your story, and then Divija can lead the whole questionnaire about the angel investing 101. Thank you.
So you want me to start or?
Yeah, sure. I mean, yes, Smita, you can start.
Okay. Hi, I am Smita Bagla, and I am a 1984 graduate in math and computer science, and I ran my 2 companies. I mean, so I had one of my exits in early 2000 and another one recently. And in the middle, I started a couple of management consulting firms. But during this process, I have been mentoring many startups in our TiE SoCal Angels. We have done since its inception, about 20 to 25 startups a year. In OC Ventures, IBOS Ventures, we have another 20 startups that I have mentored and invested in. And I love mentoring tech women. My investment thesis is to see that the startup founder is passionate, has a great team that can work through, and they are resilient, and they are in the digital health, healthcare, technology, or entertainment and media space. So I love to be part of it, part of the startup ecosystem in Southern California and globally through TiE Global Angels. So I think other questions we can talk later. Thank you so much for having me on this panel.
Okay, I'll go next. I graduated in 1997 from IIT Kanpur. Why am I saying that? 1997 in chemical engineering. Followed by that, I worked in for 10 years in US. Then I moved back to India. I set up my chain of gyms in Bangalore, exited from that in 2015, and since then I'm working as a VC. I was a partner in a fund called Unicorn India Ventures. Now I primarily do angel investments on my personal capacity, syndications, and through my fund called PointOne. um, I am here to encourage women to do angel investment, and angel investment in general. The reason being that there are very, very few angel investors in India, women angel investors in India, and there are many reasons which I will talk about during the conversation, that why they should be doing angel investments, and I think I'm here to talk about that. Thank you.
Thank you so much, Archana.
Okay. Thanks, both, and I'm really honored to be a part of the panel, alongside Smita and Archana. And I have been in the startup ecosystem for almost 6 years now and worked with early and growth stage companies through their strategic partnerships within, startup network and with corporate innovation and strategy teams. And I worked with a fintech fund called EMVC, investing in early stage fintech and insurtech companies. And for the first fund, we have invested in India founders, and it has been a great journey so far interacting with startup founders and the ecosystem overall. So happy to share my insights on angel investing today, and excited for the panel. Um, so, as Apurva gave me the responsibility to lead this discussion, so she has in fact like collected a couple of questions from the women inspired network group which we have, and these are most commonly asked questions in the group, starting from the basic. I hear an echo for some reason. Okay, let me know if my audio is not good. Um, but yeah, I'll just continue. So yeah, so these questions range from having like getting an idea on what angel investing is all about, who could be an angel investor, and all the nitty gritties around how one could become an angel investor and how could founders benefit from the right kind of investors for them to get on board at the start of growing and even starting the company. So to start with. I mean, let's address the basic question itself, right? Like, what is an angel investor or what is an angel investment? Smita, if you can, just give a
Sure.
idea on what you think angel investing.
Sure. So there's a means I haven't invested in India much. So from the US point of view and from a Thai global point of view, I can tell you, angel investment investor is usually a wealthy individual who has at least $1 million net worth of $1 million, or they have an individual income of 200,000 a year, or a family income of 300,000 a year. That is the Securities Exchange Commission's guidelines of who can be an accredited angel investor. So that is just the technicality. But in general, an angel investor is a wealthy individual who invests their own personal capital in a company in exchange to equity in that company. And they usually fund a startup at the seed stage of the company. And when there is higher risk associated, and then there are passive investors who invest just their money, and then there are active angel investors who basically get involved in the running of the company, running or guiding or mentoring of the company. And they could invest money just as one person, or they could invest the money as an angel syndicate, like multiple people get together and sink it. So in the US, that's the basic way that an angel investor can go, and usually they like to invest in the areas that they themselves have been part of. So that's the basic information from our US understanding of who an angel investor is. And there are a lot of angel investing People who do angel investing are usually successful in entrepreneurs or successful wealthy individuals who now want to give back.
Yeah, it's very much same globally, right? So I also want to. I mean, Archana, would you want to
Yeah,
start with like how is
I just
this?
want to add 2 points with respect to India. That in India, if you want to become part of a platform, then accreditation is required, which is 2 crore of net worth, excluding your home you are living in. So that is the requirement for an individual to be an accredited angel investor. However, if you want to go directly into the cap table of a company, which means invest directly, not associating with any platform or any fund, then there is no requirement to become an angel investor in India. So just the technical part, the
Yeah,
yeah. So
I see a lot of folks, in fact, like investing in companies which are without actually getting registered, without getting accreditation of an angel investor, having that 2 crore tangible assets, right?
yeah, yeah,
However, I do think like I kind of resonate what Smita said about experience in the industry, experience that could add value to the startup in their early and growth stages. So that said, there are definite risks being an angel investor, right? So Archana, have you like what is your thought on the kind of when you're investing in these companies?
sure. So I would quickly talk about, like, first of all, the like Smita was saying, that angel investment is about giving back. So you have made money and now you have some extra money which you can give back to encourage entrepreneurs on spirit. But at the same time, it should not be like, main portion of your net worth which you should be investing in. It should be the extra money which you might have, or you have, which you can, even if you lose all the money, your life is not going to be impacted. So you have to keep that, you have to keep wearing that hat, because it is not like gold investment or investment in the real estate or investment in, I mean, I'm saying that public market, because their liquidity is high, you can sell off when there is, whenever you need to be. But in the angel investment, the risk is the the company can die and you can lose all your investments. So risk is very high. But at the same time, if you build your portfolio and you invest through multiple channels, then the risk is also hedged. And I'll talk about that a little bit later during the call.
Awesome. And I hear you about the liquidity and even default risk, right? And also there's like long-term maturities for this asset specifically. So how I see is, I mean, when you look at someone managing their own finances as an individual, you have you have your savings account, of course, like you have deposits, you invest in insurance, which is like health, life, and possibly insure other other property and assets you have, and then look at index funds, mutual funds, stocks, maybe gold and bitcoin, cryptocurrency, other assets. And also like startup investments is one kind of an asset if you look at it that way,
Correct.
right? And
Correct.
um, when you actually graph all these investments of yours in a line graph, you could see maybe your deposits, which gives you like 6% returns, fall under the left, like low risky segment, and mutual funds maybe in somewhere in the middle, and startups definitely are the high risk assets, though they might give you like 3 to 5x returns in possibly like 5 years. Um, so when you're investing, Archana, you've mentioned diversifying the portfolio, or choosing the channels through which you can hedge your risks. So look forward to hear that. But Smita, before that, do you want to share how are you managing risk at this point in time, and are you only investing in US companies which are more, and then which you have more information on, or like which fall under your current geography, or are you looking at global investments as well? Just want to understand your approach.
Sure, sure. I, so as part of the Indus Entrepreneurs, that's TiE, we are part of Global Angels. So the companies are coming from all over the place. Being part of a group like that, it's good because we do the due diligence together. So the investments are a little bit less risky because if a local chapter, there are 61 chapters around the world. So if a local chapter invests in it, then that means they go through the whole due diligence of the startup, and there are multiple people, and once they've invested 100K, then the global angels come in, and then we invest more in it, in the company, if we like it or not. So the risk is sort of, because you're investing with multiple people of the same, it's like instead of having a fund and then going through, you are investing, say, like 25K in a company, so you're diversifying your portfolio that way. So there are multiple companies like that I invest in through OC Ventures. That's a women-owned fund locally here in Southern California. And here, what we do is we look at the companies, we all invest our original, like our own money, but together we invest like 50K as a startup. And for that, we'll make a special SPV, that is like a special investment vehicle. So that is like, that basically dilutes our risk. I can explain more about this later on. And if the company doesn't even have shares and everything, then we can go through a convertible note or through a safe investment, depending upon how you want to do it. So my risk is mostly in the areas that I'm interested in, but I also see if a founder has passion and I feel that they'll go further. So sometimes I would risk my money on them also, because I think everybody needs a boost.
Also, yeah, that's that's for
For
sure.
sure.
And it'd be nice yeah, it'd be nice to discuss more about the instrument you'd be choosing, debt versus equity, too, as we go along. Yeah, and Archana, do you want to share with us on how you approach your investments after how do you diligence the startups in the first place? How do you choose which companies to invest in?
Sure. So before that, getting into that, I will talk about what are the rewards other than financial gains from the startup investment, angel
Sure,
investment.
yeah.
So one thing I strongly encourage people to do angel investments, because it not only gives an opportunity to basically multiply your money, but it also gives you a lot of learning opportunity about the new business models, technology trends, marketing trends, and it also gives you the overall perspective about a business. See, I have worked as a corporate person. When I was working in a corporation, I didn't even know what am I doing, why am I doing. I was just doing the things, right? Whereas when person really gets into these kind of investment, it tells a lot more things about, like, what goes in the organization. So especially for the professional like us, we should get into the angel investment to understand, even it will help in person to perform much better. So I think one of the rewards which I strongly feel, other than the monetary gain in the angel investment. Now, talking about the second question which you brought in, that, what do I look for when I think about making an investment in a company? So I think everybody will agree, everybody looks for the same things, either as an angel or as an Series A investor, pre-Series A investors. Fundamental parameters are the same. It's just that with the growth, the numbers really starts kicking in, and it becomes more and more number driven. So I'll talk about, what do I look for? The one is, absolutely the team is the must. that stellar team should be there. There should be complementary skills in the team in order to do the business. Value proposition should be very clear, like, what they are building, why they are building, and is it going to change the status quo or not. Any differentiator, that if the business has any differentiator which helps them in basically challenging the status quo. So all the new, see, fundamentally the human need remains the same. With the technology and the availability of things, with the technology, the availability of the things become cheaper, and people use in a much wider way. So companies should have a very clear cut differentiation, that they can change the way the businesses are done. Either it is it through the product definition, through the process definition, through the market definition. So there should be a clear differentiator which will help them in company to grow. And then next one is, uh, scalability, because scalability is a very very important aspect. If the As an angel investor, that is the first thing you should look for. If the company doesn't have a scalability, you are not going to get any, I mean, much return out of it. So these are the things which I look for, and everybody looks for these kind of parameter in they improvise on that. Now, talking about, what do kind of diligence I do. So generally, when I lead the round, I do the financial DD, legal DD, etc. But when I don't lead the round, I depend on the lead investor to do all those work for me. And uh, if I but personally, sometimes I do the DD on the founders, like if what they have done, if I know someone who can talk about them. But all these things are not mandatory for an angel investor to do that. If they like the deal coming through the right source, maybe they can take a leap of faith. But when they start doing more investments, maybe probably they should go a little deeper. So the point what I'm trying to make is that they should not feel intimidated in the beginning, but they should go ahead, and then later they should start inculcating all these things into their process.
Of course, yeah. Thanks for sharing that. That's very helpful. And as I see, when someone wants to become an angel investor, or sees themselves as an angel investor, they should be able to either enhance the tech or the product of the company by directing the founders on their product roadmap or guiding them in their tech building, or enable the company to get to the go to market faster, or even boost the next financing, or next round of financing options for the company, right? So one has to be able to add in value on all these, or selectively in at least like one of these things in companies. So for one to even become a lead investor or lead a round in a company, what do you think are like, what are the essential requirements to be a lead investor in the first place? Smita, do you want to share your
Yeah,
thoughts on that?
sure. So as I said, there are passive investors and active investors. So passive investors like would be a lot of people who want to give back to their alma mater. They want to give back to the younger generations. Like here we are a multicultural society, so a lot of wealthy Indian individuals would want to encourage younger Indian individuals to come through. So there are a lot of passive investments that are not too much. They would together put in like 5K, 10K. Like for a movie investment that I'm leading, in that people are putting it like that because they want to encourage these new Indian Americans to come forth. So that is one part. And that anybody can do who has money that they would like to give back and encourage people to. People who are active investors in general, they look for, in order to become an investor, they have to see that first they have the time to be able to work with the people that they are investing in. They should do certain due diligence in terms of themselves, just like Archana said, is that, she does that even if she's a lead investor or not, she goes into the founder's background, how successful the founder has been, what have they been doing, do they have they may have the passion, but they may not have the knowledge. If they don't have the knowledge, they get other people who have the knowledge? What kind of pedigree have they attracted? What kind of pedigree you can get to them? What kind of help
Right.
can you get them? Can you bring your Rolodex of people to help that company grow? Can you bring your expertise or other people that you can help them, who can guide them to make their product better, so that it's a better product market fit if you want to get.
Yeah.
So an angel investor, when they invest in a company, they look at all this, and then only they want to invest in it. So
Yeah.
sometimes
I
it's a
like to see
passion thing.
yeah.
I'm sorry,
Oh, sorry.
what were you
Yeah, I was saying I like to see angel investors an extended CXO arm for the company, right? When they
saying?
are
Right.
at initial stages. Yeah.
So I joined like that in general. So I have done like about, so money wise, I have done about 40, 50 investments. But personally, I become the interim CXO of the company, like either the chief strategy officer or the chief business officer, chief technology officer, to interim to help them, or chief product officer to help them over the hump, attract the right people, get the right other investors in there, and then also to go through and get other, once identify the right team members, and once we have them, then I move out. So I get involved in a company like that.
That's amazing. And I see, at least like from my experience with the India angel investors and the syndicates, LPs, sorry, the lead investors take something around 15% as a carry when they invest in the companies and kind of distribute it across the investors who join them. So, I would like to hear your views on how you've seen it in your experience. Like, what is the kind of what is the kind of like ownership angel investors usually take in companies, and beyond that, what is the carry percentage they usually own?
That's pretty complicated formulas. So there are companies. I don't know who's P. I think P is being projected. Sorry, instead of me. So just letting you know
I can
that
see.
speaking, I
Yeah.
can't see myself or somebody else. It's somebody called P who's being projected. So your question was basically, can anybody hear me or see me?
Yeah, we can hear you and see you as well.
Yeah, we can hear and see you. Yep.
Okay, cool. Okay, so it's pretty complicated in a way. Like there are companies who don't have any shares because companies don't know initially what their valuation is. Okay. An angel investor at that may invest at the time when the company does not know if they are 2 million valued, 3 million, 4 million, whatever. So they may go ahead and invest at that time. And once you're investing, then you say, okay, based on your product, you need 500,000 to make your product available to the market. You have put in this much in information, 50% yours, 50% for the investment. So they do like a mental calculation like that and come up with it. So they say
Right.
they can invest as a safe. That's like a promissory note that Y Combinator has given, in which
Yeah.
they say, okay, I'm giving you $20,000 or I'm giving you $50,000 for a future share value at a 20% discount, for example.
Hmm.
So that means if you raise the money up to $10 million cap or $12 million, then whatever at that time the shares come out to be, I'll get whatever I've invested in at a 20% discount. So that's how it is calculated at that time.
Yeah.
So that's like based on convertible notes or safe. But if suppose
Yeah.
the company already have shares, then people take different ones. If I become a CXO, I typically take like 3% of what the equity will come out to be. And
Yeah.
depending upon other people, they can
Yeah.
do
No,
like,
I
it's
understand.
anywhere up to 6% is usual in US.
So I would
Got it.
like
Okay.
to add, Divija, I would like to add, I think your question, I think you are also trying to ask the question that about the carry. So the carry is
Okay.
applicable only to the so carry is only applicable when the fund managers are involved, right? When you are investing through a fund into a company, then only you will
Mm-hmm.
have to pay carry, right? Some
Also
of
with the syndicates, right?
Yeah, I'll talk about that. Some of the platforms like Angel List and Let's Venture, what they have done, they have democratized the funds, right?
Mm-hmm.
What it means that fund manager will just bring the deal and people will invest into that, right? So since the fund manager works full time to find the deals and do their DD and work towards that, so platform, since it's a democratized fund, so platform says that okay, the people who are bringing the leads, the deals, they are like the fund manager, and they are entitled to get 15% of the carry, and carry is upside, which is on any investment. So I
Right.
think that model is picking up. It is very uh, popular in US through some platforms, but most of the investment what happens in the angel domain doesn't happen through the platform. It's primarily when the angels invest directly to the cap table. So there is definitely a percent and which is growing, but still by and large the angel invests directly to the cap table, uh, vis-a-vis through the platform.
That's an interesting insight, Archana. And I know we can get very much deeper into the instruments which one can go through and how the deal dynamics works. And also, like if anyone's interested, we can get into the nitty gritties of structuring the deal through SPVs as well. But we'll open it up to questions and see uh, how detailed we might want to go, or if we could in fact like have future sessions getting into some details of it, like getting in depth into smaller aspects of Indian investing itself. But yeah, so one last question we can discuss on is what are the alternative options for angel investors to get into companies cap table, if there are any? Are there innovative methods or innovative platforms that are coming up alongside the syndicates? Have you folks seen any new instruments or new platforms that way?
I think I'll take that question because I do that all the time. Maybe Smita can add to that. So, for if you can come directly to the cap table only when founders will know you, right? Or you know someone who is the person who is the influencer of the deal, then you're only going to get into the cap table directly, right? Otherwise it's very hard to know which founder is raising money and how good is the deal is, right? So that's why 101, I encourage everybody to basically join different syndicates or networks, right? And then I encourage everyone to go to as many pitch sessions as possible, right? So if you go to more pitch sessions, I mean, I'm talking about 101, not like who have graduated from in their investment journey. Go to lots of pitches and hear to those pitches, like what the founder is doing, what the business model is all about. Try to understand that. And I would say also, like go ahead one more step and follow some of the companies. Like if you went to a pitch in the month of January, then probably by the month of December or so you should see, like how the company has performed. Because if the funding will happen or anything good will happen about that company, then definitely it will come into the media. So just keep following the company's performance. That will help you in developing your own point of view, right? Like you will
Right.
also start thinking that this is my type, or maybe I was right or I was wrong, or like whatever. But you will have some point of view. There is no right wrong, and there is nothing is absolutely right. um,
That's
and then, I would say, networks provides you an opportunity to invest in a very small quantum, right? Some of the leads, if you ask them that, can I invest only 2 lakhs, they will allow you to do that, to encourage you to bring more people into the to basically investment umbrella. So in the beginning, I would like to go gradually, and then, when you feel like, you have understood the investment to a certain extent, then start your independent decisions. But if you can take independent decision, then find the friends or founders to whom you can invest in. I mean, these are the ways you can start, and gradually, develop your own style and take it from there.
Absolutely, Archana. And you
awesome.
mentioned
Smita, would
both
you?
the things. Yeah, both the things Archana mentioned, and thanks for taking the question about the carry. It's not part of the, we weren't talking about funds, so I didn't. So thanks, Archana, for explaining that too. And as Archana is saying, in 101, we basically, you go, practice makes you perfect. So founders should go to a lot of pitch sessions and become friends with other people and figure out what exactly is happening. They should network and find more people and people who are willing to invest in. They should also find, like, there are platforms like Gust that is in the US, and then there are a couple of other platforms that IITians have set up, and I can send you guys a list of which ones are popular in the US that founders can become part of and get some funding from there. It could also be crowdfunding or 101 investor funding. But uh, Archana was spot on as to how both investors as well as founders should proceed.
Yeah, thanks for sharing that. I've seen one interesting way. In fact, like this is very popular in US again, started in India very recently. So if one becomes a scout for a larger investor, mostly a venture capital fund, you could potentially, I mean, you won't be an angel investor in terms of getting onto the cap table, but then you would still have access to some part of the carry, which kind of was similar to the lead investor dynamics in some way. But yeah, this is something which is in the ecosystem, very new here in India. But awesome. So thanks for sharing all your views. I don't know if Apurva is still on, but we can take the questions from the audience. And Smita, I know you only have a couple of minutes more with us, so let's see if we can catch up as many questions as possible.
Now that's okay.
Uh,
Until 9:30, I'm available. So I'm available for next 10 minutes. Thanks.
sure, thank you. Um, Apurva, would you mind helping us with the questions?
Oh, yeah, sure. So I would like to request all of you who are there in the audience to please pitch in questions. We have some great people on the panel, and they can really answer to your questions. So, I mean, apart from that, actually, I myself had question on the alternative ways of raising money. I mean, specifically on these things. I mean, what is the difference between incubators, accelerators? What are these online VC and equity crowdfunding um, things? So, if any one of you could just, give me 2 cents about these two things, because I'm a beginner and these are the kind of jargons which are used in angel investing. So, if you can just tell me something more about it.
Sure, I'll just jump in. So I work with Techstars, which is one of the global accelerators after Y Combinator. So usually when accelerators or incubators run their programs, they have a set of mentors who help the companies through these programs, right? Help them accelerate their growth within that time duration of the program, or sometimes when the mentors are really connected with the startup during the program, they actually be a part of startup mentoring and advising even beyond. And more often than not, these mentors convert into angel investors eventually, because of the value add they bring into the companies, and how the founders realize having them as investors would be more beneficial than just the mentor relation. So that's one of the ways to, in fact, like find the right kind of angel investors. and most efficient way, right? Because you're interacting with the folks very actively. And another source of investment which I have seen is revenue based financing, which is quite similar to the equity crowdfunding which you mentioned, where you invest in the companies as a financing product. That is like you pretty much are lending to the company and you earn interest based on how they make the revenues. So yeah, there's a company called Club in India. There's Velocity, and there's another company called GetVantage. You can check out. It could be like another asset for that matter among all your investments.
That's great. And let's say, Archana just mentioned that if you're a founder to a startup, you should attend more pitch sessions and all. So I just want to ask you, is there a place where such pitch sessions are documented and I can just go and see the different kind of pitches or any text form,
Yeah.
something like that? Where
Yeah. So my point was like, for founders, yes, definitely. But my main point was for investors. Like, if you want to become angel investor, you should also develop your own style and also like, how to go about it. For that, you will have to listen to a lot of pitches, right? Then only you will understand that what founder is saying, what he's trying to do. But somebody has mentioned in the chat window, Ashok Kamal. He has mentioned about one of the angel network in India called Inflection Point Ventures. There are so many of them, like Mumbai Angels, India Angels, Venture Catalyst. So many more are like that. You can join anyone. I mean, Inflection Point Ventures is doing a lot of deal these days, and maybe you can join that. But there are many possibilities depending on your choice and people you work with. You can join the network, so that will be every week. Every week they have pitching sessions and you can learn a lot from there.
thank you.
Yeah, I second Archana. So you can, as a initial entrant into the angel investing world, you can possibly follow a lead investor who's already experienced and well versed with investments and helping the companies grow.
Right. And there are many groups here in general that you can attend. They have pitches going on and they are available, but usually you have to be part of that network. And a lot of entrepreneurship groups at the universities, like here at Pepperdine, they are open to the public when the pitching is going on, or at I don't know if the UCs do that yet, but a lot of private universities are doing. So if people want to attend them, they can. And they can connect with them, with the ones in the local Southern California or Northern California area.
Okay, so we have one more question from Nitisha. This is a question. How can we transition into impact investing space post a public policy debate?
I haven't done much with impact investing. Archana, do you want to take that?
I was keeping quiet because I have no idea.
Okay. Impact investing, there are like a lot of impact investing angels here in Southern California and the Bay Area. And they basically have very set thesis. And the way they go about doing the investing is a little bit different, Nitin. So it's Nilesh or Nitin who's asking the question. I could connect you guys with them, but I've not been in the impact investing area much. I'm more interested in my alma mater or young Indian entrepreneurs. So
Awesome. And also, is there a place where you can see the investment thesis of all the angel investors, as in what are the kind of fees, the sectors they are willing to invest? I mean, is there a place where all of this is documented?
usually, if you look up their bio and you see the portfolio of the companies, that's how you get to them, or you ask them when you connect with them as to what their investment thesis is and what they go about and what they look in the companies. So that's how you get it. Here in general, companies like people will post, like if groups are doing angel investment, they will post that this is our investment thesis. That means we invest in the following companies. But Archana and Divija, please expand to it as if you guys can.
Yeah.
I generally, yeah, there's not much information out there, is it, on who's investing what and what their thesis is, because it's usually early stage and as like, it's most of the times it's gut feeling as well. So yeah, Archana, please add to.
So, I mean, if there is no, as your question was like, is there a place where everything is published? So the answer is no. There is no one place. But if you want to know about the micro fund and small funds thesis, you can visit to their website. But at the same time, if you are into the net angel investment space, you will know that maybe these guys are fintech VCs, these guys are health tech angels, these guys are like consumer angels. So as Smita was rightly saying, that you ask them, you observe them, and that's how you will know. I mean, basically you spend more time.
Yeah, in person,
You
right?
also have to
Yeah.
do your own due diligence as a founder to find out which angel investor you are going to be married to, which or how many angel investors are you going to be married to. So you have to do that on your own.
Okay, so we have one more question from Professor Amitabh. His question is: in the US, do angels often invest in early stage manufacturing startups? Uh, Based on his experience, it's very rare in India. So he just wanted to know about the US landscape in case of manufacturing startups.
There are many companies that do hardware and manufacturing investment. There is a company right here in Southern California, One Angel Investment Group, make in LA, that do invest in manufacturing startups, and it depends upon what stage you are at. It's a little bit harder due diligence and harder understanding as to what is your business plan, how are you getting, what is your ROI going to be, what is your MMR is going to do, and where you're going to do your manufacturing. But there are many companies, angels here in Southern California, who invest in manufacturing startups.
Okay, so we have one question from Niharika. She says that what networks would you recommend for a beginner to join and get exposure to startup pitches? For example, IPV, Mumbai Angels, Indian Angel Network, which Archana mentioned. So, Archana, can you just take up this question and recommend some good groups for her?
I think there are networks like IPV. So I think after this call, what I will do, that I will elaborate on these points and send a note to the group itself, so that you can keep it in the writing instead of. I think we should take other questions, but these are the very objective information. So I will compile that and send it across.
Okay, so I think this information we can discuss separately. Rama has asked the question: can you speak about the angel investing in first-time entrepreneurs? How do you take that leap of faith for a first-time entrepreneur? So,
Go ahead.
to you, Smita or Archana, who wants to take up this question?
So everybody starts sometime. So basically, what happens is that in order to, when you're asking the leap of faith for a first time entrepreneur, Rama, uh, is like, how do you let somebody into the idea that's yours? You have slogged and make it happen to the place you're at, and now you're asking people for funding and they get in, and how do you know it'll be a good marriage, right? So again,
Yeah,
you have to work with them, understand it, and then you have to also go with your gut feel to see if it'll work with them. And sometimes when you go with a group, sometimes it's good to go with a personal angel investor that through some connections, so that you know that they won't let you down in a way. But the other part is you go through different groups and pitch and understand what they are doing, how they are offering, what is it that you want to be getting from this relationship. And then, don't say yes right away. Go back, think about it, ask other people about those questions. There are a lot of articles on how you would be doing it. I can forward it to you or to others here, and we can also do that as getting fundraising 101, and then we can talk a little bit more about it. So I hope that answers your question at this time, Aroma, from my perspective, or would you like more?
Yeah. Yeah. Go
I,
ahead,
I
Archana, then. Yeah.
yeah, sure. So when I take a leap of faith, I have two criterias. One is subjective and one is objective. When I take the investment decisions, right? The subjective criterias which I mentioned, that there should be a scalability, stickiness. There should be the
Oops,
business which
the
they are
audio.
doing. They should have a right value proposition, differentiation.
Yeah, Archana, your
Can you
audio
hear
was a
me?
little.
Now is it better?
Yeah, it's better now. Yeah.
Okay. So, what I was saying, that in the objective criteria, I look at, like, which I was mentioning. I will compile those things and share that with the group. That value proposition, differentiation, scalability, team, etc., etc. And so these are the objective criteria I will look for. And after that, there is a leap of faith comes from that, there, that whether this will happen or not, right? So that is a very subjective thing, and everybody has a different point of view on that. I also have a different point of view on that, because sometimes it feels like this founder will may be able to deliver this. Because of this differentiation, he becomes a the differentiation is so strong that this will happen. So it's a very gut feeling. The leap of faith comes from the gut feeling. But I think before that, everybody does the objective criteria analysis. So that will be my answer to that.
Thanks, Rama. Thanks, Archana and Smita. It was great. So, Garima has posted this question. Could you please share your experience of the biggest deal you have ever been part of, especially in terms of learning? So, can both of you, can all three of you share your experience in this? We can go with Divija. She has been silent.
I would rather get Smita and Archana on this.
Okay. So
My,
I will
Archana,
go
you
about.
go ahead first.
Okay. So the best learning you get from the failure, right? Because the failure is your best teacher. So similarly, like, biggest learning comes from the failed deals. Uh, so I'll talk about one of the deals, like, in the deal which failed, without naming them because it's all on the public domain. That What we learned, that founder was not booking the revenue in a right way. He was saying that my month and month revenue is growing very fast, whereas he was showing his outstanding was growing rapidly, which means that his revenue was never booked. He was just showing some kind of a some kind of a invoice for which the customer was not committed to pay anyway. He was just creating those fake invoices, and that outstanding was growing, money was depleting, but at the same time, founder was saying that my revenue is growing month on month. So this is one of the biggest learning from me, that you should not blindly, especially when you are serving the board and other things, you should be cautious about such things. And you should not blindly believe that, you should look and they were not able to raise the next round of the funding. So very soon I realized that this is the reason why they are not able to do that. So you should be very cautious about these kind of things. But at the same time, many other times I have seen when the product market fit is not obtained. In the beginning it looks very good, but when the product really goes into the market, people reject to that. So some of my experience is in that in that area. But both has taught me that one is definitely that as a board member, or if you are like significantly investing in a company, financially you should be more alert towards the company. And as far as the product market fit is concerned, you should try to find that you are failing fast, uh, instead of keep spending money for the company into that for a longer time to increase your sunken cost. Instead of you should think about writing it off much quicker. So these are some of my learnings.
Great.
Awesome. Great. Yeah.
So, uh, so one of the biggest deals that I've been part of is the one that came like a little surprise to me. So sometimes I didn't have much faith in the founder, but they had a good team. It was entertainment, it's gaming, and they had a lot of celebrities at part of it. So I did invest in it, and I invested a lot in it, and I was willing for my like for that one of the deals was the ones that I was willing to throw away the money in case it didn't matter, right? So I thought initially I only put in 25K in it. And after that, as the founder started doing well and he got a lot more people involved in it, I started paying more attention to it. And in that one of the deals, the company's valuation grew to 30x. Right now, it's worth $45 million. Just and they're doing extremely well. And there's so that is one of the deals that I've been part of in the recent years where my money has grown by 30x. And I am really happy about that. That is, and so the learning from that is really nothing. But Archana is right that it is where your learning comes from, is also your failures. Now, there is a couple of other companies where I have invested a lot of money, but it was in steps because I had to keep total track of them that they're going well. So this was a mental health company, is a mental health company that initially came out with a great product that was looked like it would be a great product market fit. But they were doing it for everyone, like from children all the way to adults that are 65, 70, or anything. So trying to get the product market fit and trying to define the niche and focus, it took time. So as they were not getting the right monthly revenues or annual revenues, I was able to strategize with them, help them change the direction, buy some brick and mortar companies to be part of it, so that now the evaluation has gone big. So one is the deal in which where I'm actively involved. It's taking a lot of time, but it has proven very lucrative because you're always on the watch on that. Once a month, I meet with the founders at least once or twice a month, and I keep a close eye on them. So that is how sometimes the biggest deals happen, and sometimes when you're just passive, it does work too. So there are many other stories about people that fail, but I don't invest initially. I don't invest that much at the first go. I invest in steps. So it works out for me that way right now.
That's great. So, Divija, you want to pitch in something from your end?
So in terms of learnings, what I found is investing in. I mean, I look at market as well and get a sense of direction on where the market's heading before one can take a decision on the company as well. So this is one of the parameters, right? So what I've observed is even if the market is going to grow big in that particular segment, even if it's like the first time idea, that is like it's the new innovation that would be coming into this market. It highly depends on how the founders are, how passionate they are to get this company scale in the long term, plus how they are positioned to get the right kind of hires, and also how they would be reacting to market variations. That is like last year has been a big challenge, and it's been a great learning as well for investors, that founders who are not able to be flexible and move with the market failed really badly last year. So these are some of the learnings which I have, gathered when I've observed all these aspects, like specifically in terms of like which companies you might want to back at really early stages.
Awesome.
Hope that's helpful. Yeah.
Yes, yes, I think that that's great. So we have one question from Shalini. She's asking, what is the amount that you need minimum for doing a direct investment in any startup? And how much should we invest in a single startup? So I guess her question is around diversification, as in, yeah. So this is a question. Anyone wants to take up this question?
So
I mean, I've
technically,
seen as small as 2 lakhs. So,
yeah.
yeah.
And technically, there is no minimum requirement. As long as the founder is accepting the money, you should take it. I mean, you should be able to invest. Even you can invest 25,000 if he is willing to accept your money. So technically, there is no minimum requirement.
And I guess our second question is not that much defined, but it's like, how much should we invest in a single startup? So do we have any parameters around this?
Yeah, there is no parameter. It depends on your appetite and your risk-taking ability. Like, the angel investment, the first thing you should keep in mind that even if it becomes zero, you should not worry about it. You should, it is a money. If you lose it, then it's not going to impact your day-to-day life.
Yeah.
So that then it depends on your appetite and your financial position and your willingness to take that risk.
Uh, I would just add to it is that if you are a new angel investor, go slow. Don't invest everything you have just by taking it takes a little bit of learning, even though you may be very savvy, very good, person who can judge people, a very good judge of people, judge of founders, and you really feel for them. It would still be good to take it a little bit slow, like invest a little bit, get other people to get involved in it, and then go from there. That's my personal experience, is like, don't get overexcited and put like 100K right there. Means I've invested all the way from 10K in companies to 25K to 40K in each of the companies, because I go on that level of this and I participate in some funds. So maybe initially it would be good for a starting angel investor to be part of a fund where there are other people who are doing due diligence, and then they can do sidecar investments. Like if they like a company, the fund has invested like, say, 100,000, and there are 10 people in the fund who are investing, and they have invested 100K, then you really feel for the founder, then you can do a sidecar investment of about like another 25K if you want, but go slow a little bit.
Okay. Thank you so much, Smita, Archana, and Divija. So we'll be taking the last question for this session from Rama. Forums like this increase trust in the process, and forums for both angel investors and entrepreneur and founder. So, Rama, what is the question
Yeah,
here?
yeah. Sorry. So let me kind of say kind of what I was thinking. So coming from the entrepreneur, first time entrepreneur, founder point of view, it's like, you had the idea and you want to protect it, or stealth mode, the stealth mode, which is in direct opposite of what Smita and Archana were saying, is like, go to as many pitch sessions, because that's where the angel investor is actually observing and finding out about you and kind of understanding about you. So, this balance between going deep into what you're doing, but not divulging all of the IP and all of the thinking, because from the founder point of view, that is a concern, right? And then it takes time to go to all these pitch sessions and present, and it kind of takes time away from actually doing the work inside the company. So that's sort of what I was trying to get at, is uh, you have to build trust and build awareness of the company, but it's a balance from from the company point of view.
So I can take part of it, and Arshna, if you can take part of it, that'll be great too. What I would say, like, because of all the pitches that I've seen, and I'm guiding people to put those pitches together, a lot in this is you don't give all your IP away. You indicate how that what you're doing, but you don't indicate how it is done. In the first pitches with the people, if somebody shows interest and wants to deep dive, sometimes you have to take a risk and then work with them and explain to them. But again, there are levels that you come up with as to how much you share, and um, it is like how they're doing, and you should do a little bit of a background on them also as to are they really interested in it for your pitch, to understand what they're, are they really interested in helping you, or are they mostly interested in getting to know this so that they can develop it. So it goes both ways, but sometimes you have to take a little risk, because and just an example is one of the companies that I had guided them to write their mobile app, basically completely was wonderful mobile app, and the founder was so excited, and he got this interest from this founder from a really big food chain company, and he said, oh, he wants to invest, and we asked him to be a little careful, but he was really, really impressed with this investor who had found this food chain companies, and he showed everything about the app. And then the person didn't invest, but they also came out with a separate app like that. So I know there's sometimes a risk there, but you have to do a little bit more understanding, make sure that you have an NDA that they sign. You have to do a little bit, have the lawyers on your side a little bit to have those things together, so that, when people sign an NDA, typically they don't go against it and they cannot use whatever you provide to them. That's what I would advise. Arshna, your, and Divija, your, please go ahead, add your.
Yeah, so
I would like to
my
know the, uh, sorry, I hope I didn't interrupt. Oh, okay. So I would like to just chime in. It's as much as the investors choose startups to invest in, it's the startup founders as well who are choosing the investors, right? So it's on you to, in fact, like choose the right kind of investors who would add in value to the tech and product, and also very strategically choose who could potentially, help you in going to different markets as well, like as you launch and grow your company. That said, like if you get introduced or if you get connected to the right kind of investor, his or her network would be a large value add for you to find other supporting investors as well.
no,
Yeah.
absolutely. I think you guys have covered all the points, so I don't need to elaborate on that.
Okay, so awesome. So this is the end of our session, and I would like to thank all three of you, Divija, Archana, and Smita, for coming here and devoting your time to, uplift all our spirits and encouraging us to take more towards angel investing and look to it as one of their career options. I would like to thank you for giving us a view into the risk and rewards in angel investing, the technical jargons, the US versus Indian landscape, sharing your experiences, telling us about how important is product market fit, how important is researching into the founder's background and trying to know their way of working, the dynamics of the company. So I think this has been a very incredible session for all of us, very informative for all of us. So thank you so much, everyone. And since Archana wanted to share some sources with you, so anyone who wants to have that on their email, can you please share your email ID? So whoever has registered with us, I'll be sharing that with all of them. So if you have not registered and if you have directly joined with a link, please share the email ID on the chat and I can just forward the items.
Thank you so much and have a great day and have a good night. Bye.
And
Thanks, Smita, Archana, Purva. Thanks, everyone.
Awesome.
Good
I
night.
hope it was informational. Thank you. And anybody wants to reach out, you can direct message me or put it on win at IITK and we can answer that. Thank you
Yeah.
for having us. Bye.
All right.
Really awesome people. Thanks.
Bye. Thank
Bye,
you.
everyone.
Bye, guys. Sandeep and Amit, can you share the recording with me? And I think that'll be great. And also, can you share me the numbers